What up, folks? All right, welcome back to the Gauntlet, where we have our discussion of analysis before market open on Sundays, right? If you've never done trading or investing, then you have no idea what I'm talking about. But you decided to come on this journey with us, with the best in the world. I didn't know this stuff when I first started trading. Nobody broke it down to me because they didn't know. And they still don't know. I'm going to keep it hopefully around 10 minutes. That 10-minute special, right? That seems to be a nice time to keep an attention span. It just feels right. So we're going to do that. The gauntlet consists of the 10-year yield for the US dollar and for the Japanese dollar, the Japanese yen, the 10-year for both countries. And then the US dollar, the VIX, the volatility index for the S&P 500, and the fear and greed indexes for the stock market and for crypto. I missed that last week, and I'm going to make sure that I don't miss it this week. Very important, because we're dealing with the Federal Reserve, Jerome Powell, and soon a new Fed chair will be in our light. Good morning. And the Fed tells us, because this is what I'm being told, that Fed Chair Powell, he's not the one that makes the decision. It's a board of governors and 12 governors. It's not just Jerome Powell. Okay, whatever. But the point is this: the interest rates have been too high for too long. Where the Fed says, oh, we're supposed to get the rates down to 2%. And we've been cutting rates for 2 years now. And the rates are at 4%. They're not at 2%. Now, who does that benefit? If interest rates are high, who does it benefit? It benefits the rich, because they don't care where the interest rates are. They can buy whatever they want, whenever they want, however they want, with whoever they want, right? They have freedom. Poor people, on the other hand, need the rates to come down to 2% before they can afford. They have no choice. They cannot afford to borrow dollars at a high interest rate. If you do it, you can still do it, but you can't afford it. You have no room for error, right? We're getting right into this today, right? The gauntlet. These are the things we need to check before the market opens, so we can see, okay, compare it. And if you go back on my channel, every Sunday or Monday, I can do it on Sunday or Monday before the New York Stock Exchange opens at 6:30 in the morning tomorrow morning. I can do it from now until then. One nice little video called the Gauntlet, and we can put the dates on it. You can go back and revisit every gauntlet for the year. I'm going to do this for a whole year and see how it goes, right? 365 videos, maybe 700 if I do 2-a-days. And you can see from week to week to week how we're transitioning on the 10-year yield, because the interest rates are too high for too long. Now, if we've been cutting the interest rates, we cut by 0.25 in September, we cut by 0.25 in November, and we just cut by 0.25 in December. Okay, so why is the 10-year yield going up instead of down? If we're cutting interest rates, because everybody seems to say, oh, we just cut the interest rates, we can refinance. No, it goes down and up, down and up, down and up. The daily chart, let me show you the daily chart, right? Every candle is 1 day. Now we're going to go back to September, and there you go. We start cutting the interest rates, it acts like it's going down, and then it goes right back to the top. Act like it's coming down, go right back to the top. When are you going to refinance? You're rolling the dice. You might catch it when it's down, you might catch it when it's up. We need it to come down to 2% and stay down there. This is what I'm explaining to you. Nobody ever told me this. They say kinda this and kinda that about interest rates. And people have no idea what they're talking about. It's getting caught in the okie doke. Right? Now the Japanese 10-year is at 2%. Imagine that. It was below zero for 20 years, and then within the last 3 years it got above zero, and it went straight to 2%. Straight to 2%. Those are daily candles. Day after day after day. Up, 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 up. Where the US dollar, the cost to borrow the dollar, and let's just say, okay, the 10-year yield is the cost to borrow dollars. Nobody wants to borrow dollars at a high interest rate. You want to borrow them at low interest rates if you're not rich. Okay, so they talk about the 10-year or the Japanese carry trade. Well, if the US dollar is too expensive to borrow, why don't we go borrow the Japanese yen at 0%? That train left the station, didn't it? It went from 0 straight to 2%, right? And we're supposed to be coming down from 4% down to 2%. We're cutting the interest rates. Well, why aren't the interest rates dropping? They said when we cut interest rates that rates are supposed to go down. Well, is somebody lying to us? All you need is a chart. The chart will tell you exactly what's happening. We all have access to free charts. So I'm going to keep explaining this week after week after week. We're going to come in here every week and see where the 10-year yield is. It should be heading down to 2%. These are your dollars. Every one of us has dollars, right? Let's go to the dollar. And mind you, the basic scale of 100 applies to anything that has a price or a number on it. So if we're going up from 4% on the 10-year yield, 4, 5, 6. 6 is the premium, 4 is the discount. So if it's going to go up from 4, where is it going to? It's going to 6. And if it gets past 6, it's going to 6.5, 7.5, 8.5. Now, if it gets down to 4 and gets below 4, it's going to 3.5, 2.5, 1.5. You see? The basic scale of 100 comes from God. It's how numbers move throughout the world. Trading is life, and life is trading. What you do in your life, you're doing your trading. What you do in your trading, you're doing your life. These numbers apply to everything that you do in your life, which is why it's important to me. God sent me to explain it to you. You don't have to agree. It's how the numbers work, straight from the universe itself. So I'm at 9 minutes. I got 1 more minute. The US dollar is at 100. It got up to like 115. I mean, it was up higher than that years ago or whatever, but in the current structure, 115 was its high point, and it dropped to $1. It dropped 15%, and now it's going from 100 towards 90. So if it already dropped 15% and it goes down another 10%, that's 25%. If the dollar goes from 100 to 90, I used to be told by people, you know, the dollar drops by 7% every year. It's dropping by 7%. Now it's 10%. It's increasing. It's gaining momentum to the downside. You're losing value of your dollar, and the assets are getting more expensive. You see? Oh, everything's getting more expensive. Yeah, your dollars are losing value. That's why it looks like everything is getting more expensive. Well, if you might want to put your dollars into things that are going up, because if you keep that money in your bank account, it's going to go down, and you're going to lose all the value, 10% a year, especially when we print money. When we print money, it is a supply of dollars in tens of trillions, because we're not just printing for the U.S., we're printing for the whole world with the world currency still. So we're printing tens of trillions of dollars, what causes the dollar to go down. You understand the analogy I used about the toilet paper. In your city, if there was one roll of toilet paper, there would be a hell of a demand for toilet paper, right? That means the value will go up. But if you have 1 million rolls of toilet paper, then the demand is down. It's overly supplied. Shout out to Venezuela. Because now we control Venezuela and we control the oil. We are oversupplied on oil. That means the value of the oil will go down. When there's a demand for oil, then the price of oil goes up. They want to try to create wars. Iran, they want to go to war so that they can get the demand of the oil to go up. I am the sauciest. Like, this is how you make your YouTube channel the best in the world. People don't agree. I have to say I'm the best. So we're past 10 minutes. The fear and greed. I missed this last week. Fear and greed index. You want the fear and greed to be at extreme fear or extreme greed. During extreme fear, that's when the market is dipping and then everybody's like, stay away from the market. No, that's when you're supposed to be accumulating shares. During extreme fear. We were at extreme fear about a month ago in crypto and in stocks. And now we're no longer. We're back to the middle of the meter. And now it has to either go to extreme fear or to extreme greed. Extreme greed, that's normally where everybody starts buying when you're supposed to be selling. That is the measurement, the temperature check of dumb money. Dumb money will buy during extreme greed and sell during extreme fear. I was supposed to keep this at 10 minutes. But we have to talk about the dumbasses, right? Yeah. The 98%. You have to have a 2% mentality. You have to flip the script. You have to do opposite of what they tell you to do. They who? Government, church, state, county, and city. The bamboozling that's been happening for centuries upon centuries, generational curses being passed, right? So that's the message for today. I didn't really talk about the VIX, but let me just throw out the VIX. The VIX spikes to the upside and the market falls. When the VIX drops, then the market, it skyrockets. What market? There's multiple markets. Everything don't do the same thing at the same time, but in the long run, they all do the same thing over the long run, right? So shout out to activity. It's those that are active. I have to lead by example and give you the right information so that you can use it and you'll be able to pay it forward. Once you understand it, you can explain it, see it, say that you see it, and do what you say that you see, and then you can pay forward the information that don't nobody else talk about on YouTube, right? And you know who we do it for the people, not the profits. It's the consistency and persistency that wins in the market. To beat the market, you must become the market, and the market moves with integrity through its price. If you lack integrity of the price, you get wrecked. And you know where you got to go, right? You got to go to the kumbaya party. You don't want to go to the kumbaya party. It's saturated with clowns. Hey.